All right, everybody, what is going on? My name is Arman Vakili, and this is the Stock Splits Show, the show where we talk about stocks that split. Now, just in case you have no idea what that actually means, a stock split is when a company divides its existing shares into multiple new shares, and they do it mainly to boost liquidity, but they also do it because they want to increase market cap. They also want some publicity so that they can invite new investors into their company or to buy their shares, etc. And typically, even though the number, like the actual number of shares increases, the overall value of your portfolio still stays the same. So what does that exactly mean? So if it's a 2-for-1 split or a 3-for-1 split, sometimes there's a 4-to-1 split. Sometimes, like the example that I'm going to share with you today, there's like really odd numbers with the way that they've actually split their stocks. And so in this particular example, if we do a 3-to-1 split, and you have 2,000 shares that are valued at $300, then after the split, each one of those 2,000 shares splits into 3, so it's 3-to-1, right? So you would end up getting 6,000 shares, but because your value of your portfolio needs to stay the same, the price per share also adjusts. So it is going to be $100 per share, but if you do the math, 2,000 at 300 is the same as 6,000 at 100. And so the value of the portfolio, again, remains the same. So why would a company do this? And then when you look at the example that I'm going to share with you, some of the splits are literally, it's one of these things where it's like there's a bunch of question marks that are going to pop up around my head, or I feel like they do. There's like all these digital graphic question marks or whatever, like cartoons or something. And so it really brings about this question of what is the purpose? Why are you guys doing this specifically if it's not to really do anything for the market cap of the company, or you're not trying to bring in new investors? And then in the example that we're going to share with you guys, which is what Verizon, right? So you've probably heard of Verizon. If you haven't, they're a telecommunications company. They sell phone services, like either cell phone services or even internet services, as well as technology like the phones themselves or the devices themselves. And so Verizon throughout their history has had 6 splits. And when we look at it, the first one, pretty simple, 2-to-1, another one that's 2-to-1, and another one that's 2-to-1, right? This is relatively simple. If you've seen any of our other episodes, this is nothing new. Now, this is interesting. So in 2006, they had a 1 million to 963,340 split. Meaning if you had 963,340 shares, you would end up getting 1 million shares for each 963,340 shares that you owned. And then you fast forward again, in 2008, they did something very similar where instead it was 1 million to 995, and then they do it again in 2010, which is 1 million to 937. This is the first time I've ever seen a stock split that's like this, which begs the question, why would you even do this? So this situation, in this particular situation, I feel like this addresses liquidity a little bit more because there's such a large volume of shares that they're addressing. But it's also, I would think, and this is something that I probably have to do more diligence for so I can speak on it a little bit more authoritatively, but I think it's because of the fact that, especially when you consider the 2008 crash, the 2007-2008 market crash, and then the recovery that they needed to go through, and it will show you the actual stock prices and how everything has played out historically for them, they weren't doing that well. So Verizon was in a situation where they had a lot of competitors coming into the business, T-Mobile, AT&T, and all of these other individual telecom companies that also came in and they were trying to compete. And so they took a lot of market share from Verizon, but then there was just a lot of stuff that happened also within the tech industry that affected the growth of this company and affected their stock rate. So here, let's actually go look at it. So if we look at the performance of the stock for Verizon, and the earliest that we can go back is 1983. So 1983, our first one was in 86, right? So our first split happened in 1986, which is around this time right here. So we have a $15 price point at their stock. And the second one happened in 1990. So if we go forward to 1990, it's $20. So not that much of an increase. There was some kind of an increase that happened. And then if we go a little bit forward, even to 1998, around the time in 1998, they're now a little bit higher. So kind of towards late or mid 1998, they were at a $47 price point, and then the dip happened, and this was right before another spike goes on, but then the Y2K crash happened, the 2001 war with Iraq and the United States happened, and so there was a pretty good market correction that happened between the year of 1999 to 2002, as you can see right here. This affected telecom businesses and technology businesses much greater than average business, like regular, as we talked about Procter and Gamble earlier, or Home Depot. They weren't hit as much as tech companies were. And then when you look at the recovery, they didn't recover until 2019, until 2020. Because you have this spike that happened at $60 in 1999, and ever since 1999, this stock was struggling until they finally got to 2019, and they kind of went back to that same price point. And even in 2020, because of the pandemic crash that happened, and AT&T took a big hit, Verizon took a lot of these telecom companies took a big hit as well, because they were forced to close their physical locations, and it was like a really, really crazy thing that happened when the 2020 pandemic took place. So when you look at the performance of the stock, does this inspire confidence to you? And this is actually one of the, I think, out of everything that we've done in this series so far, this is probably the worst looking stock. And no offense to Verizon. I'm not trying to slander you guys in any way. I'm just being objective about the actual performance of your company when we just look at you guys historically. And so if we're looking at this company historically, if you were looking at this company as an investor, and even if you don't know anything about investing, this doesn't inspire much confidence. And something that is, I think, really required and like really, really almost mandatory when you're investing into a stock or into a company or any kind of investment is your confidence that whether or not this thing is actually going to come out positive on the other side. If you have even a fraction of a percent of doubt that this stock is not going to perform well, I wouldn't do it. And this is just my personal thing. And I'm not a licensed stock or securities advisor, so please consult with a licensed securities advisor before you do this. Do your own due diligence before you purchase into any kind of stocks or anything like that. But me personally, looking at it for my own portfolio, I would not touch this thing. Now, if we were to go look at the market cap for Verizon. Wait, what just happened? Oh, I'm getting a phone call. Let me see. I'm just going to stop that because I have no idea where it's ringing. I think it's still recording. Yeah, we're still recording. So if we were to look at the market cap for Verizon and kind of zoom in on this a little bit and see what we got here. So it all starts in 2005, like mid-2005. So far, everything that we've done has started at this point. They're at a 95 billion market cap, which is actually not bad compared to everything that we've looked at so far. That's a pretty strong market cap. But then you have the crash that happened in 2007 and the effect that it had on this company. And even still, they were able to recover because of their affiliations and their partnerships that they made with the different manufacturers for the devices. So the phones, the tablets, and everything else that they actually sell through their company, because they do get specialty pricing when they order through Apple or when they order through Samsung, and they can sell at a profit or they can sell at some kind of a margin. Or even if not that, if they sign some kind of a contract with one of these device manufacturers where they have a specific device that only belongs to Verizon, which actually happens a lot, that like there's one particular brand or one particular device that only gets the contract with AT&T versus Verizon or vice versa. And because of that device, because of the fact that people want that device, they go to the company and they're able to increase their market share. They're able to increase the subscribers to their phone services because of this device that's being offered. So through those integrations and through those partnerships, they were able to still retain or not retain, increase their market share a little bit. But again, you look at this and it's too volatile. It's way too much up and down. Even in the eras that it's actually going up, there's just too many of these corrections. And then when it finally makes it back up here, there's just too many things. So because of this, because of the fluctuations and the volatility of their actual stock prices, because of the sheer amount of competition that's going on in this industry, and then when you have the proprietary devices that are being developed by the different telecom companies, it's really, really, me personally, I kind of get a little anxious when I look at this kind of a graph or when I look at this kind of a company. Whether or not I'm right is totally up to speculation. People can offer their own opinions. I would love to actually hear your opinion on that topic if you think that this is a strong stock or a strong company. But I think it's not. And so, again, I'm not the licensed securities advisor. I've just been in the industry for about 14, 15 years. I've been in financial services. I've been around these different marketplaces. I've been through several market crashes so far. So I've seen certain things, and just based on my personal experience and my own portfolio, I don't do this kind of stock or company. But it's just interesting to think about. It's interesting to look at, because so far we've looked at companies that have been pretty solid. Like when you look at the performance of the Procter & Gamble or Home Depot or Apple or Amazon or any of these guys, Microsoft, whoever it was that we've covered so far, when you look at their performance, just based, even if you have no background in finance or in stock investing or anything like that, when you look at the information that we covered across the other companies as well and compare it to this one, it's pretty obvious that this is a little bit more volatile. It's a little bit riskier. It's not as guaranteed. And none of it is guaranteed, by the way, so that word should be used with a grain of salt. But relatively to other companies, this is one of the weaker ones, right? So again, no diss or disrespect to Verizon. I think they're great people, and they're offering great services to people. I just think when you look at it as just like a objective view, and you're not involving any kind of emotion or personal, I don't know, infatuation or anything that is possibly related to this, and you just look at the numbers and you just look at their historical performance, it's kind of obvious, right? So no diss here. Verizon, you guys keep rocking, keep kicking ass. This doesn't mean that you guys aren't going to have an amazing decade in front of you. None of that even is remotely relevant right now to everything that I said, because your history does not mean that that's your destiny. It doesn't mean what happened to you does not necessarily mean that it's going to constantly keep happening to you. You guys could change for all I know. And I'm addressing the one person from Verizon that might watch this that might get mad at me for saying it. So other than that, I'm very, very curious to see what your feedback and what your opinion is on this particular company, because it's a really famous company. A lot of people use them. A lot of people are with them. They've just gone through a significant amount of adversity, and it's really interesting to see what they're going to do in the upcoming years and in the upcoming decade, because the world is leaning more and more towards technology and leaning more towards digital and internet-based commerce and all that stuff. So there's a lot of open room. There's a lot of growth for companies like Verizon or Tesla or Elon Musk. Through his several companies, they're going to be going into the internet and telecom kind of space. So it's just a giant space. There's so much upside. There's so much opportunity. It's just whether or not these guys can actually adapt to competitors like Tesla, to competitors like Amazon that have these deep pockets and they have a lot of ingenuity. Yeah, they have a lot of people who are creative and they can do a lot of things. So really, really interested to see what happens. I'm interested to hear your comments and your feedback on this particular topic. And of course, if you have any questions, please submit your questions. We'll try to address them either in future videos, or we'll just respond to you guys in the comments directly and see what we got, right? Let's see what kind of a conversation we can have about this. So my name is Arman Vakili. This was Stock Splits, and I will see you guys in the next episode. All right.